Hey, welcome everybody. It is March 29th. Mark Coe coming to you to discuss what we saw today, the markets, also to announce so that everybody's aware we are having an open house in our room tomorrow. We'd love for you to join us. It's at 8:30 Eastern Time. We'll be showing you what we do on a daily basis. We'll be talking about the model. We'll be talking about the the newsletters, the commodities newsletter in the morning and the FX newsletter at night. And we're going to be doing this stuff all in real time, so we hope you join us. A couple things I wanted to look at today just to give a little indication of where we sit. Model, as we come into tomorrow, 30th of March, here's some of our current positions. We are long Aussie dollar from 16, which is going to be a pretty good amount in the money tonight, about 500 bucks. We have a couple sell limits working, and then we are also long crude oil from 47.68. So as we approach the close, it's about 1,800 bucks in the money. So not too shabby. So those are the model positions. So the models having a nice little run here. Euro yen is also a model trade, which may or may not get stopped out. Just going to depend on where we close in euro yen. I wanted to talk about a few markets today and look at kind of the difference between trying to trade these things versus holding positions. Today, I think was a real good indication of a market that was pretty easy to have a trade in, maybe not so easy to trade. And I want to look at crude oil. So as you remember, I just pointed out on the model, crude oil has been long since 47.60s. 3 days ago, I guess. So Friday it got long down here. Yeah, so there's where the model's been long from. So the model is long. So the model has been long, hasn't done one thing. So think about crude oil. Rallied yesterday, rallied well. Anybody that's been following crude oil, trades crude oil, know that we saw some severe weakness to take us down to the 47 handle, but it's rejected two efforts to get below 47, and this is where the rally occurred. So coming into today, Wednesday, we have crude inventory data, and that's what you see here at 10:30. But until then, it was a pretty tight market, pretty tight in early U.S. trading. It was about 20 cents wide for the better part of the day. There's your 48.60 and there's your 48.40. So that was the bulk of the trade in U.S. session until that move. And so this move occurs right on the crude oil inventory release. From that point, you're trading above 49, and then the market just gets locked for about an hour, again, inside of 20-point ranges. Now, the reason this is so challenging to trade, here's what you're kind of faced with at this point. You're faced with paying up for crude that you just had the ability to buy 60 cents lower within the last hour. Now you're paying 60 cents higher, but in a market that doesn't really move. So this crude market trades up to 15, up to 16, right back down to 03, 04. That is very challenging environment in which to sit there and look at a intraday move, to watch 15 cents move against you quickly and then to pay up as it starts to go the other way. But ultimately, crude never violated any big support. So the difference here being a positional trade in crude where you're already long and you get to enjoy that versus chasing that, because one of the things we look for in kind of this momentum is a pullback to get us into a level, and without a real pullback, it's very challenging to keep paying higher. It's even more challenging to keep paying higher when you're not getting quick resolution. So I just wanted to look at that. Euro dollar, pound dollar, I actually did the first which I'll talk about tomorrow, the first one contract trade. So did it today in pound dollar, and it's still live. But essentially, it bought pound dollar at 24.29. So right here, and it is running a stop right there. So it's still live. We'll see what happens, but that is the first in this series of one contract trades to see how it can perform with one contract. It's long. Pound dollar at 24.29 with a stop at 23.93. A lot of the other markets you're seeing dollar yen pretty tight. I've been talking about this for a number of days. Dollar yen has not been able to re-challenge the 111.60, which still keeps pressure on the downside. However, it's now had two attempts to trade down to 110 and not been able to do it two times in a row. So the problem is now you're kind of locked in this range. You don't have unbelievably good support areas to deal on, but you're not at really top edge resistance. That resistance really sits above 111.5. That's pretty decent, and it goes up to 112. So it's a bit of a challenging area because you're not getting a lot of clarity. Eurodollar continued to drift lower today as well. Sat right above the support I've been talking about. 730, 740, and managed a small little move off of it. But again, Euro is doing a very similar move. Drifting, not really taking out any major supports, but also not bouncing. So a bit of a non-committal day, I would tell you, from the currencies. Probably the best day around is the crude oil markets, and then Aussie's also having a pretty good day. S&P's managed to stay up near their highs, but again, no massive follow through past this 23.55 level. So, would love to have you guys join us tomorrow, Thursday, March 30th. Come into the room at 8:30. It'll be in there for a couple hours. We'll go over kind of a game plan. We'll look at markets in real time, and it's a great opportunity to see what we get to do here. So, for the 29th of March, this is Mark Coe. Hope to see you all soon. Cheers.